This coming week sees the latest Eurozone inflation figure being released on the 1st of October, but this comes hot off the heels of a Spanish and French inflation report that saw both figures falling sharply. The question mark here is, will we see a similar kind of thing for the Eurozone, and what does this mean for the euro and for the DAX? So here's a breakdown in terms of expectations for the figures we're going to be seeing over the course of this week in terms of inflation within the Eurozone. Germany sees a raft of regional figures reported ahead of the sort of overall German metric. So the morning is likely to be dominated by all of those regional numbers, and we ultimately in the afternoon see, this is UK times, ultimately in the afternoon see that inflation metric for the wider German region come to the fore. Then Tuesday, we see that Eurozone number. The expectations here pointing towards a decline from 2.2% to 1.5%, well below that 2% target. And bearing in mind, we're seeing, of course, the US cutting rates by 50 basis points. But the Eurozone, many had been looking towards the Eurozone to hold rates in October and only wait until November to cut once again. That has changed pretty markedly off the back of the French and Spanish readings that we've just seen on Friday, the 27th. Core metric expected to drop down to 2.7. That certainly will be the final hurdle. You can see the headline inflation numbers really moving sharply lower. The expectation here is a minus 0.3 figure. And so that core number is also going to be key. Here's a breakdown in terms of the direction of travel for some of the main economies between these four countries. It accounts for 70% of the CPI figure, the Eurozone CPI figure, most notably the German number. We're expecting to see German CPI decline, as you can see here, 1.87, so 1.9. Expectation of a drop down to 1.5. So that 0.4% decline, if that's what happens, plays a significant role in driving that Eurozone figure lower. But also French CPI, 20%, and it's at 1.17. So, you know, these numbers are really pointing towards the ECB having overshot target and likely going to see more of the same going forward. Here's the Eurozone headline CPI breakdown. We can see here 2.17. The expectation of a decline well below that 2% target does point towards the monthly figure coming in particularly low, because 0.32 is the figure that's being stripped out from last year. And so it's a question mark of how negative this reading is going to be, quite frankly. And as we've seen with this, you can see that the monthly figure is expected to come in as a minus 0.3. So it's really the weakness of the monthly figure rather than base effects that are playing such a significant role. And certainly, you know, if you look at the French number, French inflation for the month of September down minus 1.2 for that month alone, the biggest drop for a monthly inflation gauge in France since 1990. And so, you know, these kind of figures are really pulling in towards that sort of Eurozone figure and driving that likely decline on a month-on-month basis that does drive the deterioration of the headline reading. But if you look beyond that, you can see October, November, December, January, 2 of those months actually have negative readings that are going to be stripped out, which makes it more likely that someone's going to, that the price of, sorry, the inflation is going to rise on those months. And the other 2 months, relatively low figures. So what looks quite likely here is that we see a decline into your sort of mid ones, and then we potentially see it maybe grind a little bit higher. It depends if we're going to start setting a precedent and seeing monthly figures like this on a regular basis. But if we don't, then you could potentially see it sort of staying in the 1.5% up to 2% range. But then when we get into next year, that 0.62, 0.76, 0.58, that in sort of Q1 going into Q2 of 2025 does point towards that next big leg lower in terms of Eurozone inflation. In terms of the core metric, this is even more stark because you see those figures for the beginning of next year, 0.67, 1.1, 0.7. Once those are stripped out, the February through to April period, you're going to see some really heavy disinflation coming into the fore. For the time being, markets are expecting a sort of slight move lower. We're likely to see inflation actually move higher in terms of the core basis at the back end of this year, going into next year when that January figures stripped out in particular. But nonetheless, looking into next year, you can say that inflation has pretty much been combated, because at 2.83 here, and looking at the kind of disinflation we're going to see at the beginning of next year, you could say that core inflation is pretty much going to get back down to target, saving any sort of major surge in terms of monthly inflation pressures. This is the breakdown in terms of the differentials in UK and Eurozone yields and the relationship that has upon euro sterling. Now, bear in mind that the expectations for interest rates will also feed into the yield. So what we're expecting from the Bank of England versus what we're expecting from the ECB and the relative levels that we've got, those kind of things are relevant here. It's notable that UK core inflation is significantly higher than Eurozone inflation. So that could bring cause for concern at the Bank of England and potentially provide a little bit of a slower pace of easing essentially at the Bank of England. And bear in mind, UK rates also already significantly higher than the Eurozone to begin with. So the deterioration that we're seeing here in terms of Euro versus UK yields does point towards a possibility of further downside to come. Here's the expectations within the markets for the ECB meetings. You can see now a heavy swing in favor of a rate cut, 95%. That was not the case not so long ago. There was an expectation that we would see the ECB hold off. And then from there on in, you can see pretty much a 25 basis point cut at each and every meeting going through into maybe July. We're looking at that's when it starts to become a little bit of a coin toss, and potentially markets thinking that they might keep rates at 2%, and then it becomes a little bit more difficult. Perhaps one rate cut back down to 1.75 towards the back end of 2025. But really, it looks like it's a rate cut each time around from here on in. And certainly those expectations only are enhanced if we do see a decline, a significant decline for this latest inflation reading. Here is the outlook for euro sterling. So we're talking about that deterioration in terms of euro versus UK yields. And that has helped feed into this downtrend that has been lasting. I mean, look, this is monthly chart, right? So pretty much 2023 into 2024 has been determined or driven by weakness in terms of euro sterling. We do see volatility on a month-on-month basis. There's so many candles within this that have long upper and lower shadows, but we end up seeing a relatively slow body. And so that does point towards some chop within the mix. So here's the daily time frame. We can see exactly how that's played out. So you can see, the trend is very clear, but we do see sort of wider swings coming back into place. And sometimes you see a big deep retracement. Sometimes you then go into smaller moves. Well, we've been seeing some pretty big moves recently. That latest decline, shallow retracement, decline. We're in the middle of that at the moment. The question mark is, do we see a continuation of that move? And certainly considering the fact that we're at this really crucial area of support, 0.83 down to 0.82, that historically has been a massive support level. So if we break through that, then this looks like a big old triple top that we're looking at here. So, massive level of support down below. The trend continues to be bearish as things play out. But I would say if we start to break up through your 0.837, does point towards a possibility of us sort of moving into a wider retracement phase from here. So certainly if we see that big collapse in terms of Eurozone inflation, it provides us with the basis to think that we could perhaps see that next leg lower. But be aware of this 0.83 down to 0.82. That zone of support historically has capped some of these big moves and limited the downside. If we break through that area, then certainly we could be in for a major reversal for this market. But as things stand, that is not how it's playing out, because we haven't seen that break, and therefore you need to be aware of the possibility that the bulls come back in play. In terms of the DAX, it's a really interesting one, because if you look at the German economy, it's in the doldrums, but you wouldn't think it, considering the strength of the German index essentially. And so part of that is going to be optimism about the potential turnaround, but ultimately the trend is your friend here, right? So you're just playing a trend that has been very clearly defined and continues to play out. So we're looking at a possibility of a retracement at some point, but if we look back at recent retracements, they've been sort of quite minimal in nature. Haven't necessarily seen any sort of really big retracements recently. So I would say the key level to be looking out for here is going to be this swing low that we've recently established, 18840. As long as we remain above that level, then near-term retracements look like an opportunity for the bulls once again. And the wider trend, as we say, weekly, monthly, you can look at these charts, the wider trend is bullish. And the fact that we've just broken out from this consolidation period that it really has lasted a good 6 months, something like that, 5-6 months, we've broken out from that now. And you look at previous moments where we saw that, well, you could see something similar around this zone here, right? We sort of saw a pullback. We did see a tentative rise. We tried to break up into fresh highs. We then saw a deeper one. So you can see here, we tentatively posted a new high. We tried to break through the prior high. We then saw the deeper pullback. And then ultimately we rallied up and broke through. Well, we've seen exactly that here, and we've broken through. So this looks to me like the beginning of another bullish phase, another stage in this rally for the DAX. So yes, it looks on the near term to say, we're really stretched. And we could get some sort of retracement over the near term. I mean, if we look back at how it played out previously, you can see we did break through resistance in a very strong manner. And then ultimately we went into a phase where, how long has this lasted? Sort of mid-December into mid-January. So we saw a month of consolidation, broke up, consolidate, and then we go straight up. So where are we at the moment? Well, we've seen that strong rally. Could we see a retracement? Of course we could. And that could be a protracted period of retracement. Perhaps it lasts for October. Perhaps we have a big focus on US earnings, on the US election that's coming up, and we see a bit of a risk-off tone or a little bit more caution coming into markets. That's certainly a possibility. But the breakout that we've seen here, for me, looks like a precursor to something that we've seen in the past. And given the fact that we're pivoting towards a pro-growth stance, towards a stance that's going to be really focused on easing monetary policy and soft landing territory, certainly in the US, things are a bit more jittery closer to home in Europe, but nonetheless, that focus on really kickstarting the economies once again should bring potential benefits for markets such as this. So the DAX does continue to look bullish, but be aware of the possibility of a retracement at some point, if only to come back down into potentially trend line support before the bulls come back into play. So different ways to play this, but certainly from a long-term perspective, you want to try and find trends and hop on them. That might be hopping on within a breakout. It might be hopping on in a retracement. However you like to play it. For me, the DAX looks like a really interesting market over the medium term. It's not necessarily just something that I think is about to reverse imminently. I think, this rally is here to stay, and I would expect to see further upside to come over the medium to short term for the DAX.